Have you ever seen a price gap so powerful that it completely shifts market direction? That's what we call a breakaway gap, a strong signal that smart money is making a move. But how do you spot one early? And more importantly, how can you trade it profitably? In this video, I'm going to break down exactly what a breakaway gap is, why it happens, and how you can use it to catch explosive moves before they take off. So stick around till the end because I'll be sharing a proven strategy to capitalize on breakaway gaps like a pro. If you're ready, hit that like button, subscribe, and let's dive in. So what is a breakaway gap? A breakaway gap occurs when price gaps significantly above or below a key support or resistance area, signaling the start of a new trend. This type of gap happens with high volume and it shows that smart money is aggressively entering the market, leaving little chance for price to return to the previous range. So how can we spot breakaway gaps on the charts? And to keep it simple, a breakaway gap is a fair value gap. We all know what a fair value gap is, where we have a 3 candle pattern. We have candle 1, candle 2, candle 3, and the low of candle 1 does not touch the high of candle 3, leaving a gap in price. So a breakaway gap is when we have a fair value gap, but candle 3 closes below the low of candle number 2. In the same way, we have a bullish example where we have candle 1, candle 2, and candle 3. A breakaway gap is when candle 3 closes above the high of candle number 2. That is how we can easily identify a breakaway gap. Remember, nothing in trading is 100%, but looking at breakaway gaps in this method gives you a higher chance of it actually being a breakaway gap than just a normal fair value gap. Here we can see the candle number 3 closed below the low of candle 2, leaving this breakaway gap that we can anticipate price not to come and revisit this area. So we can anticipate price action to then react out of this fair value gap and not come all the way up to hit this breakaway gap. In a bullish example, we have candle 2, candle 3, and we can see that candle 3 closes above the high of candle number 2. So we can anticipate this fair value gap to stay open, thus making it a breakaway gap or BAG. Then we can anticipate this price to hit this fair value gap and not come back to hit this breakaway gap. So then we'll see something like this in price action, where we revisit the fair value gap that's closest to price, we react out of it, and we don't see price coming back up to this bag. In the same way, we have this example, where we see a revisit of this fair value gap, and we don't see price action coming back down to this breakaway gap. Here we have a practical example in real price, where we can see a breakaway gap busy forming. So first of all, breaking this chart down, what do we have? We have a sweep of a liquidity point, and we also have a bullish CISD. And so now after this liquidity sweep, what happens? We start trading away from it. Here we have a fair value gap. Do we consider this a normal fair value gap, or can we consider this as a breakaway gap? So we have candle number 1 that starts the gap. We've got candle number 2 as the displacement candle. And then we have candle number 3 closing above the high of candle number 2. So we can anticipate this fair value gap to remain open. But now there's no other fair value gap that we can trade away from. So this is normally how a breakaway gap would form. And depending on the time frame that you're on, when we see this happen, we drop one time frame down. So from the 4 hour, the next time frame will be the 1 hour. Then we go to the 1 hour time frame, and we can see that we have this 4 hour breakaway gap in place. So I'm just going to go. We've got this 4 hour breakaway gap, and what do we see above that? We are looking for bullish PD arrays, because remember, we do not see price action coming down to hit this breakaway gap. So which PD arrays do we have keeping price from hitting lower? We do have this 1 hour fair value gap over here, and we can anticipate an IRL to ERL move, What that means is we can anticipate price action heading from an internal range liquidity back up to an external range liquidity. And so this is where time frame alignment comes in. We have identified our breakaway gap on the higher time frame. We have dropped one time frame lower to identify potential bullish PD arrays that will support prices higher. And so now time frame alignment comes into play. So from the 1 hour time frame, where do we go to? From the 1 hour, we can drop to the 5-minute time frame. Dropping to our 5-minute time frame, here we can see that we do have this 1 hour fair value gap and we have this 4 hour breakaway gap. Remember, we don't see prices coming back down below to this breakaway gap. So now we can look for a bullish signature in price to anticipate a move higher. So playing price ahead, what do we have? We've got this bullish rejection candle, but this doesn't invert a fair value gap, or it doesn't even change the state of delivery. If you have watched my reversal video, you would know that the very first thing that happens in price action is an IFVG. So we are waiting for that IFVG to take place. What happens here? We sweep out the low, and do we get a fair value gap? We do. We create this little fair value gap, so that can be a potential IFVG. Waiting for price action to do its thing. What happens? First of all, we do have this change in the state of delivery, and that happens above our breakaway gap. So we have one bearish down close candle that made the low that got closed above. So if I'm just going to zoom in so that we can see it, and here we have that bearish fair value gap. So remember, if price action is bearish, we would like to see this fair value gap support prices lower. So if we invert this fair value gap, we have a potential of moving higher. Letting the next candle play out, what happens? We invert this fair value gap, so that becomes an IFVG. So now we can anticipate price action running higher. So either you can go ahead and take a market execution on the candle that created the IFVG, or you can wait for a retest of that IFVG. I prefer to use market executions. We are covering the low and we can take a target at this 5-minute external high. And as soon as we hit that, then we can go back to our 1 hour to look for external targets as well. So we have the next candle. We trade lower into that IFVG. So if you took a retest, that would have been a beautiful entry. And then we can just let this trade play out and do its thing. And there we go. We've hit our 1 hour external high. If we go back to the 1 hour, you can see that is in fact our external high. And then we can scroll to the left and we can take targets at swing points up until we've hit this target, because that is going to be our market maker buy model completion all the way up here for a 7.55 risk to reward trade. And there you go. But realistically, this is not going to happen. Realistically, you're going to take targets at this high, and that's still a 2.38 R trade. Here at the Simplified Trader, we have empowered hundreds of traders to reach consistent profits through our proven strategies and expert support. As a member, you'll gain access to our exclusive Discord community, buzzing with daily content, and you would have direct access to me and support from fellow traders worldwide. If you do not get funded within your first 3 months, you can enjoy a free 30-minute one-on-one mentoring session with me to get you back on track. You will learn the exact models I use to become a full-time professional trader. I'm a 6-figure personal capital trader. I don't use funded platforms. I have used funded accounts to fund my personal capital, and I only trade my personal capital. If you are struggling to become a profitable trader, you can join in on my live trading sessions 3 times a week, where you see exactly how I break the charts down from opening the charts to trade execution to trade management. You have access to weekly live trading, market analysis, my in-depth trading course, everything I've learned over a decade of trading condensed into bite-sized video lectures. You get access to my professional trading journal, you have one-on-one coaching sessions with me, and you have full access to course updates. And if you think this is just another course, I get it. Go ahead and read the testimonials that our people, our students are busy getting. We have people that are changing their lives. This isn't just another course. I'm here to show you the reality of becoming a profitable trader, and I'm here to help you get there no matter what. Have a look with anybody in our community and they'll tell you the same thing. So if you're ready to become our next success story, hit the link in my description and I'll see you on the inside. And so starting here, what do we have? We have price action going lower. We've had this bullish CISD and now we're trading higher. We create a fair value gap here. And do we close above this candle's high? We fail to, so we can anticipate prices coming lower. That doesn't happen. Instead, we just run away with it. Then we continue higher and we can see that we create a fair value gap over here. This candle closes above the previous candle's high, so we don't think price action is going to come back down to tap this gap. This becomes a breakaway gap. And we see exactly that happening. Price breaks away from it and we continue running. We have the same thing forming over here where we have another fair value gap. Candle 3 closes above candle 2's high. And so we don't anticipate price coming back and we see price running away. Here it failed. Here we have a fair value gap. Candle 3 closed above candle 2's high and we revisit that gap. Here we can see it failed. Our method has failed. We have revisited this fair value gap. And so remember, nothing in trading is 100%. But viewing breakaway gaps in the way I've taught you today is the highest probability of the gap staying open. And so now we run away with it. And what happens here? Here we close above the candle high again and we revisit it again. So we tap into this fair value gap. Somewhere here we would have gotten an entry to go long, but we have tapped this breakaway gap. Same thing here. We have tapped this fair value gap and trade away from it. Price doesn't come to this fair value gap, so this is a successful breakaway gap. After we ran away, we have had a change in the state of delivery. So now we are in a bearish market environment. So after this candle close, we can anticipate price to run to this fair value gap and even invert it, because we have gone from a bullish program to a bearish program with this bearish CISD. And after this, we are in a bearish program. So what happens now? If we have to have a look at price action currently, what happens? We sweep liquidity, we close through these up close candles that took out a high. So this is a valid order block. We trade back into this valid order block and we respect it and we trade lower. So not only do we have a valid bearish order block here, we have a valid bearish order block here as well. Looking at price action here currently, we can see that we have a fair value gap forming and we have closed below the low of this displacement candle. And this is quite an aggressive gap, so we can anticipate this to be our breakaway gap. So what happens now? What did I say? We drop one time frame lower. From the 1 hour, we drop to the 15-minute time frame. And we can look for bearish PD arrays that will keep prices from hitting this zone. So we need something to protect this gap. We have this up close candle, which will be my order block. That will be my order block. And so we can anticipate price action trading into this, respecting it and trading away. Because remember, we don't want to see price action hit this bag. So we can wait for price action to hit that level. And now what happens? How do we frame a trade from this zone? From the 15, we drop in our time frame alignment sequence. So from the 15, we go to the 1 minute. Here on the 1 minute time frame, what can we see? First of all, we are looking for a market structure shift. Our market structure shift will be from this high down to this swing low, because this swing low made this swing high. So we are waiting for a market structure shift. Price action trades higher. We sweep out the high. So we have made a new market structure shift low. So we are waiting for that low to get taken out. We take out that low. So now we have confirmed our market structure has gone from bullish to bearish, And we also have this market maker sell model. So how do we get involved? We are waiting for a bearish fair value gap to form to confirm that we are displacing away from this 15-minute order block. Now, looking at this price action, do we have a bearish fair value gap? We do. We've got this bearish fair value gap over here. And so that is our entry point. We can take a trade at the retest of that fair value gap, and we can cover the high. Because remember, we've got so many confluences that tells us that price action is not going to come back to this gray box here. And we can take first target, we target this low, and then we can go back to our higher time frame to look for potential long-term targets. So we are playing this ahead. What happens? We trade back into our gap and we see price action displacing away from it. So now we have hit our first target. We can take partials, and this is where we go to our higher time frame, our 15-minute time frame, and we can look for potential other target placements. So if we look left here, we see that we have already taken out this low. The next target will be this low. So here we have a potential target. Looking for the next swing point, here we have a potential target. So let's see if price action can hit our targets. There we go. We have hit both targets, and this is where I'll take full partials. I hope this video has shed some light into breakaway gaps and how we can trade breakaway gaps profitably. How do we identify a breakaway gap, and how do we use it in a consistent strategy that we can use to trade the continuation away from breakaway gaps? Remember, nothing in trading is 100%, but this gives us an edge over the market. Nothing in trading is going to be 100% win rate, but if you have a 30% win rate with a 7-hour trade, you are a very, very profitable trader. And that is what I teach. I teach consistent profitability over a long period of time. I want you to trade full-time, be an independent trader, and trade for yourself. My personal model's got a 70% win rate with a minimum of 2-hour trades. And so if you want to learn from me and have me look over your shoulder and teach you exactly step by step how I view the market, a 10-year veteran in trading, check out the link in my description. As always, I hope you enjoyed the video. Take some notes, let me know in the comments what you want to see on the channel next, and I'll be happy to make a video about it. I'll see you guys in the next one.